Hello friends, welcome to my channel. In this video, we will learn breakout strategy for Forex trading. You're about to learn is my personal favorite. This strategy has been responsible for some of my largest gains over the years. In this lesson, you will learn how to identify the setup, when to enter the market. We will also take a look at several examples of Forex chart. So, let's understand how many ways price possibly can react when approached to support or resistance level. Okay, we start with this resistance line. I am considering you have basic understanding about support and resistance. We will go through all the scenarios and understand each one of them. In first scenario, when price come to the resistance, there can be no push down, and it directly go through the resistance without any hurdle. We call it push through price. In second scenario, when price come to the resistance, it can stay there for some time and make price action, and then it gives breakout of the resistance. In third scenario, when the price come to the resistance, it may slightly go above the resistance and then reverse back. We call it fake out. Fake out are very common in market. Next, in fourth scenario, when the price come to the resistance, it can bounce back a little, and then it gives breakout. We call it a bounce breakout. And the last scenario, when the price come to resistance, it get reversed from the resistance. You will always see one of these 5 scenario in any market when price reach to support or resistance. We have learned all the scenarios of price reaction while approaching to resistance. But how do we know when price will break out or get reversed? It depends on the multiple factors. Basically, I check these common 6 factors for analyzing the price reaction on support or resistance. Trend, quality of zone, time spent, volume, strength of move, and fake breakout. We will learn each of them one by one. Once you learn how to analyze these 6 factors, you will be confident when taking trade on support or resistance. Technical analysts use support and resistance levels to identify price points on a chart, where the probabilities favor a pause or reversal of a prevailing trend. Support occurs where a downtrend is expected to pause due to a concentration of demand. Resistance occurs where an uptrend is expected to pause temporarily, due to a concentration of supply. Market psychology plays a major role, as traders and investors remember the past, and react to changing conditions to anticipate future market movement. You can know how to react when price approach support or resistance level, once you analyze these 6 factors. I will suggest you not to use them lightly, because we all know, trading is a probability game. And adding these factors in your trade will increase your probability of being right, so don't make a mindset of 100% certain. There is nothing 100% certain in financial market. Let's start from understanding trend. You may have already heard popular phrases like, the trend is your friend, and, follow the trend. But, what is a trend exactly? In its simplest definition, a trend means the direction of the market. In more technical terms, a trend is the direction of successive tops and bottoms. In this example, you can see the price break the previous high, also called resistance, and then make higher highs. When it keep breaking the previous high, it is called uptrend. There are 3 main types of trends: uptrend, downtrend, and sideways. During an uptrend, there are higher highs and higher lows. On closer inspection, one can notice that each top is higher than the previous top, and each bottom is higher than the previous bottom. An uptrend is likely to continue in the same direction. Same logic applied to downtrend. During a downtrend, there are lower lows and lower highs. When you see market trending up, you should always look for buying opportunities. Never sell in the uptrend. Similarly, when the market is trending downward, you should always look for selling opportunities. Do not look for buying in downtrend market. Let's understand our second factor, which is quality of zone. It is very important factor. What is quality of zone? When the resistance is established, price come for the first time to retest it. It will be strong zone for sell. It means the probability is high that resistance will not break. But when price reach second time to retest the resistance become less strong for sell. That means the resistance can get break. Suppose if it does not break in second retest and bounce. But when the price reach third time to retest, it has higher chance of resistance to get break. Zones become weaker after multiple retest. We should always avoid selling on weak resistance and also avoid buying on weak support. Here in this example of euro-dollar chart you can see, the demand zone after multiple retest become very weak. And on the third retest, it get broken. By understanding this you can reduce the number of bad trades, which is usually a losing trades. But here we can see that, on the first retest we have buying opportunity. So it is okay to buy on first time retest, which is high probability that the support will not break. These small each one of the factors increase the probability of profitable trade if used correctly. Now you understand the factor of quality of zone, let's move to the next factor. Time spent at support or resistance level. Most of the time you see market in the consolidation phase. But if you know how to take advantage of some specific type of consolidation, you can identify very low risk and high reward profitable trade. What I mean by specific consolidation, when you see market is spending much time near support or resistance, it makes the consolidation around it. Once the consolidation is broken, then the price tend to move in one direction. In this chart you can see how market spends so much time around the supply zone. Once there is breakout after consolidation, price move very fast. Consolidation are found frequently on resistance and support. This is low risk and high reward factor, which you should not ignore when you see such opportunity. The price move very fast because many beginner trader think they should sell on resistance. All of them sell on resistance. But once the price gives breakout in their stop loss direction, their stop loss get hit and seller got trapped when the price goes upward. Next factor is volume. You must have seen many analysts talk about volume when there is a breakout. But looking only volume factor can mislead you. I would not recommend to look just volume factor alone when looking for good trades. It should always be used with other factors. I never looks the volume alone. Okay. So what happens in the volume, when there is a breakout candle? You will see sudden volume increase at the same candle where the breakout occur. If there is breakout of resistance or support you will see the sudden increase in the volume. This sudden increase of volume tells that, there are many trader are willing to buy this breakout and as well as it is hitting the stop loss of sellers who tried to sell on this resistance. Here in this euro-dollar chart, you see when the breakout occurred downside, the volume increased suddenly at the breakout candle. Sudden increase in the volume means there is a significant increase in the volume with respect to previous 5 or 6 candles. I would like to repeat again, do not use volume factor alone to find the trades. Always consider other factors which are mentioned in this video. Sudden increase in the volume give the notion of being a genuine breakout. In this scenario, considering other factor, you can take the breakout trade. Let's move our next factor which is strength of move. You must have noticed many time market gives breakout differently. There can be 3 cases when the market gives the real breakout. First, price can directly go through the resistance zone without any halt. In second case, price gives pull back to the resistance and then it moved to the breakout direction. Price does not wait and keep moving. But in the third case, price gives pull back and before advancing in the direction of breakout, it halt for some time at the previous minor high, then it gives the breakout again to that micro consolidation. These 3 cases I mentioned, because when you see such cases you should only consider second and third case only to take high probability trade in breakout direction. In first scenario, it will be very difficult to enter the market as the price move very fast, or chances are that, it can be false breakout. Now we will learn how to identify fake breakout. Suppose this is resistance zone, when you see candles gives breakout with big body candle. The chances are higher that this is the genuine breakout. Body size can be about 70% to 80% of the length of candle. This type of candle you should not ignore, it is highly likely that it is going to go further in the breakout direction. But you should always wait for candle to be closed. But in second case, when you see candle like this, which has long wick at the top, you should be cautious while thinking about entering into breakout trade. I have seen many of my colleagues, even myself, found in this situation. I used to be very eager to take trade when there is a breakout. I used not to wait for candle close. Most of the time it comes out fake out. In this third case, even though the candle has big body, it can still be a false breakout. The genuine breakout must have follow through of big body candle, which you can see in first case only. In second and third case, there is no follow through. In this example, we see how to take advantage of fake breakout. Whenever you see such fake out candle at resistance zone, you can put your stop order just below the candle. Fake breakout trades are very profitable if handled correctly. In this chart, you can see many factor you just learned aligned to find very high profitable multiple setups. For example, as you see it is a downtrend, that means you should always look for sell. You can sell below fake breakout candle. Or you can sell on the breakout, which is confirmed by sudden increase in volume. Also validated by because it is the second retest. So now you have learned all 6 factors. You should look for at least 3 to 4 factors in your favor before taking any trade. These factors will increase your probability of profitable trade. In next video, we will learn about advanced market structure. You cannot miss the next video. Please subscribe to the channel to get the notification as soon as I release the next learning video. Give a thumbs up and comment if you think it is good content. Thanks you for watching.